A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street, dated May 16th, 2022.
The breaking news this morning is that Adani to buy Holcim's stake in Ambuja Cements and ACC for $10.5 billion to seal largest infra and materials deal in India. With this deal, Adani becomes India's second largest cement maker with a capacity of about 70 MTPA. The other good news this Monday morning is that SGX Nifty is indicating a gap up start for our stock markets, joining the conga line of rising global stock markets. The big question, will the early morning rebound be a dead cat bounce? Honestly speaking, after last week's drubbing, bulls will simply enjoy any relief rally. Any rebound will be welcome, but digging deeper, Dalal Street will spend most of Monday's early morning gains applying some vibrant lipstick to what was otherwise a pig of a week gone by for investors. We say so because with inflationary pressures all across globe, with the Fed still seemingly wedded to 50 basis point hikes for each of next two FOMC meetings, and most importantly, the odds of a rate hike in June by the RBI, the street will anxiously await the WPI inflation numbers stated to trickle in on Tuesday, May 17, 2022. We expect the inflation numbers likely to be higher, just like the CPI inflation numbers that trickled in last week. That brings us to our call of the day, which suggests the expected rebound likely to be a pause, and most importantly, investors should not hurry up and buy any strength. Well, there is still no respite for the bulls to stick their heads out as the bear storm hits world markets with a bang. We suspect the benchmarks at the last street to trade volatile with upside capped and probably collapse heavily if Nifty slips below its biggest support at 15,671 mark. With Fed and other central banks across the globe trying to rein on inflation desperately, it's going to be a tough call to take bullish bets even on any dips from here on. Bottom line, the fear of an economic slowdown is more profound than it appears as central banks across the globe are making desperate attempts to win over the inflation scenario. Long story short, bears unlikely to give up. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 15,782. Sell between 15,950 to 16,000 zone. Strict stop at 16,337. Targets 15,671 and then at 15,501. Aggressive targets at 14,251 to 14,500 zone. Bank Nifty current market price 33,121. Sell between 33,600 to 33,750 zone. Strict stop at 35,501. Targets 32,155 and then at 31,821. Aggressive targets at 30,521. Outlook for Monday, bears still have the upper hand. Another main reason for the pessimism can be attributed to relentless selling from the FIS camp. FIS camp continued to be net sellers for the 8th straight month since October 2021. In Friday's trade, FIS sold shares worth Rs 3,780.08 crores while DIS bought shares worth Rs 3,169.62 crores. Q4 earnings to trickle in today, Bharat Forge, MCX, Raymond. India VIX, which measures the expected volatility in the market, has inched up to 23.06 levels. VIX has to sustain below 20 mark for stability and to bring the aggressive bulls back on street. The Nifty options data for May series suggests Nifty is likely to be in a trading range of 15,500 to 16,500 zone. Maximum call open interest at 17,000 followed by 16,000 strike price. So the 17,000 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 16,100 and then at 16,300 strike price, while there was meaningful put writing at 16,000 and then at 15,800 strike price.
That's all we have for now. For any queries, do contact us at 0224076 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.